Welcome to Java, and thank you kindly for joining me. It's August 25th, 2025. It is Monday morning. This Monday's Intel. Little play on part of what happened last week. And I've got this up here so that you can choose your assets. There is so much going on today. I'm not going to be able to cover everything that I want to, but this, in short, is what you should be doing. Checking out which positions you want to be in because there is about to be a massive shift in all things of value valued in the US dollar. So we got cryptocurrencies, precious metals, real estate, artificial intelligence, stocks, fiat currencies, foreign currencies, private equities. These are all options, and you should see what your risk level is and what you're comfortable with now so that when they go on sale, you can move into the position for these for your longer term. Everybody is different. Now, let's get started with what's going on in the markets. We've got the fear greed meter jumped massively. Greed territory for certain at 61. This was on the back of Chair Powell hinting at this rate cut. Now, the daily driver, the Dow soared over 800 points. It hit another record high when he said that there should be a policy shift and they're looking forward to this. So that, in short, is September rate cut, more rate cuts very likely, and we'll talk about why in just a bit. Now, we've got the United States taking a 10% stake in the company Intel, a government artificial intelligence chip. Are they going to rename it US Intel? I think they should because that's about properly what it's going to be used for. Now, jobs are really what the issue is here. They're finally beginning to catch up with what we've been talking about for some time. And if people are losing their jobs, they're not going to be spending money on anything out, especially discretionary income. And that is going to soften the economy in a massive way. When they stop spending, companies have to cut corners because they're not making the sales. And part of what they do is they fire more of their workers, they cut down on their workforce. So it's a spiral that can happen. And I believe that this is what they looked into. They finally saw this and they are afraid that this could accelerate rapidly, which it can. Now, in other news, we've got 50 days for tariffs on furniture. That is coming out of the White House. So with this more accelerated inflation, at the same time that jobs and the real economy are weakening. That is, again, if you haven't been here long, the definition of stagflation. So we're clearly in that territory at this point in time right now. It's not something we're going into. We're in stagflation, heading for a very clear recession. Now, I put this up here because we've got data.gov. This is where a lot of reports and things are. So, including lottery Powerball winning numbers if you choose to gamble outright and play the lottery. Some people do. But there is some interesting data in here if you care to check that out. Now, I want to look at the 10-year yield, relative strength of the dollar. Dollar got decimated on this news with the rate cuts. They're recovering a bit this morning. So, this is throwing a few things. First off, foreign currencies, relative strength of the dollar. So the others are going down, mainly the euro and the Japanese yen are the two that we're looking at the most, as well as the UK pound. So with these going down, dollar gaining strength, we've got stocks in the green. This is from Friday, but the futures are showing weakness. So I've spoken about massive moves before, like a heart attack. They move severely one direction and then they recover in the other. So what we're looking at is stocks probably opening weak this morning is what it looks like. The highest probabilities they're going to sell off a bit of that overfroth from Friday. Now we've got the 10-year yield is also rising. This means bonds are selling off. They sell off, that goes into the market. We've got one other interesting dynamic, and that is that the government purchased a large amount of the short term 2 year to hold off for these rate moves. Now, if they did this, this is going to distort the long end of the curve, is what they call it, the 30 years. Now, The 30 years when those drop, typically it means that you're in a recession or definitely heading toward one. So that's one large indicator that we are watching. This is the 10-year we watch these for the markets. They're the benchmark. So for this calendar for this week, we've got GDP, core PCE on Thursday and Friday. Today, new home sales, and then a lot of Fed speakers. So the market's kind of going to be watching in particular what they say as far as these moves going forward, as long as they are supported. We're getting durable goods. They're saying nothing on Wednesday. However, NVIDIA is announcing their latest quarterly results. So Wednesday could be a massive moving market day as well. Large report they're watching the jobless claims Thursday. And then, as I said, GDP and inflation numbers. Now, these are the earnings and reports expected for this week from the larger companies, in particular, NVIDIA, Snow, HP, CrowdStrike, aftermarket on Wednesday. So, I want to point something out also that is an interesting statistic that could be significant. 70-year-old Americans own over 40% of the United States stock market and they cannot go back to work. So, the significance of this is that if there is a recession, they will look at monetizing their stock holdings. In other words, they're looking at selling so that they can get their dollars or value out of it in order to survive. So, if they do this and they own 40% of the stock market, that would be very serious pressure on the stock market and not up. It would be down. So they could very definitely cause a reaction there. And once that spiral starts, it accelerates very rapidly. Now, a few other things. We've got the currency crisis coming, the economic collapse that could reshape the world. This is in regards to fiat currency, the constant printing, the debt outweighing the GDP and the production. So this is not sustainable. They're saying this is coming out. We've got a few other indicators. Now, aside from the ones I just spoke about, the long end of the curve, we've got Brent. This is oil. Now, oil swinging to a rare discount against Middle East oil marker. Prices coming down. Now, oil prices coming down are good for inflation, brings inflation down, production costs down. However, it also means demand is down, and that is major indicator also of recession. Now, talking about Evergrande, now this is China's massive building uh, company, major builders. Why should we care about the crisis hit Chinese property giant? Because they own large properties globally, including United States, New York, Los Angeles, as well as in the UK, London, Paris. And if they get hit, they could take down a lot globally and spark property crisis, commercial mortgage-backed securities in specific. Now, we've also got China's 80,000-ton Fujian aircraft carrier, looking to debut on Victory Day. Why am I bringing this up? It's a war economy, also in the East. So they're, in short, doing the same thing. Public spending, as it is, pumped through tax dollars and just increasing their debt and then spending through their central bank to cover it. So we've got German economy is in structural crisis. This is according to Merz. And we've got India now, because of the tariff war going on there, they're going about this a smart way, hiring a DC lobbying firm with ties to Trump as these tariffs loom. So instead of crushing their economy, they're going through a very different negotiating tactic. So I've got quite a few things I still want to cover with you. I know this is going on a bit. We've got the US consumer spending slowing sharply as labor market weakens. And tariffs are raising inflation. This is according to a report that just came out by Fitch Ratings. So I think that Powell is now beginning to get these external reports and not just looking at what they're getting from the BLS and these other outdated methods that have horribly skewed numbers. And I believe that that is probably what moved him. So, Wall Street September Fed rate cut bets still hinge on the next data. So, even though he's speaking about policy stance softening and kind of cueing in that there would be a rate cut, we are still getting a couple of other reports. And if they come out massively off sides, then there could still be a hold off on these rate cuts. So we've got to watch that as well. We've got US jobless claims rise, adding to the signs of this slowing labour market. Now, this slowing labour market is going to spiral. We've got sharply higher layoffs and rising unemployment, and this again is what they're looking at. However, the inflation is that other side of the balance they've got to look at. Now, Canada consumer spending faltering as July sales decline. So, this is just a harbinger of what is coming out more in the United States as well as globally. So, not looking good on the broad side of this. We should be prepared for quite a bit of this. We've been talking about this for a while, and now it's happening. So, the last thing is private equity fundraising sliding as that sector's downturn deepens. Now, private equity has kind of been a silent bolster from the private market side. However, it's kind of been on a shadow side because they don't have to report like the public entities do. So that could also be an issue. And then also, I put this here, it is not the next candidate for the Fed, although possibly could be, I suppose. It is actually a screwworm, which is now, as they say, invading the United States. It was here before, but you'll see this across the news as well. It's going to be a bit of a distraction, I believe. So we've got to stick to what is important, what is going to affect you and your family, not just in the near future, but also longer term. So back to what I had originally brought up, it all goes down to assets. They can control fiat. They can control prices of real assets to a degree, some more than others. And if you want to know more, join our Discord group or feel free to email me. I've got my contact information in here. So with this, I wish you all a wonderful day, particularly a green day if you're trading. Caution on this open, it looks to be extremely weak. And until I see you again, my friends, resist.